In this presentation, we're going to continue on with forms related to the customer section, this time looking at deposits. Now, you'll note here that the deposits form is over here in the other section as opposed to under the customer section, and that's because we could have deposits that are not from customers and not part of the customer cycle. However, we're hoping that most of the deposits that are going to be made are related to customer sales and therefore kind of part of the customer cycle, sales cycle, revenue cycle. Here we are in the free test drive version, which you can find by Googling QuickBooks Online Test Drive for Craig's Design and Landscaping Services. We're currently in the dashboard, and we're going to be looking into the deposits. Now, note, as we go forward, we're actually making some forms within this test drive version. So if you've removed or left the test drive and you're going to come back into it, any form that you create will probably be gone at that point in time. So just realize that as we go forward. The only information, you can make forms, you can manipulate the files. However, if you leave and come back, then those forms that you have created most likely will no longer be in the test drive version. If I go to the QuickBooks Desktop, just to figure and take a look at our flowchart, last time we had entered the invoice basically, or the time before last, we entered the invoice, which is basically billing the client. So that would be an invoice to the client for work that had been done for which we had not yet received payment on. We can imagine mailing that out. Then we received the payment. We can imagine a check coming in the mail. We got the payment. When we created the invoice, accounts receivable went up. And then we said the other side was going to sales, in essence. Receive payment means that undeposited funds, hasn't got to the checking account, went up. And the other side went to the decrease of the receivable. Now we're going to go to the actual deposit, taking that deposit we had, and if we had any other deposit, putting it into the bank account, increasing the actual checking account amount, and decreasing the amounts that would be in the undeposited funds. Now, in the flowchart, note that the recording deposit is over here in the banking section, but it's clearly indicated that it's part of the customer section as well. That is because the deposits could be coming from something else. We might have got a loan. We might have had the owners might have put money into the business, for example. However, we're hoping most of the deposits are coming from this type of flowchart, coming from the customer section. So let's see what that would look like if we go over to QuickBooks Online. So if we open up our QuickBooks Online, we're going to do our standard procedure. I'm going to open up the balance sheet and the income statement first. So we're going to just get used to this. I'm going to make new tabs for the balance sheet and income statement. We're going to be doing that a lot. We're going to go to the reports down below. We're going to pick up our favorite two reports. Let's start with the profit and loss this time because that might make it a little bit faster. We won't have to pull the tab over. There's our profit and loss. We're going to change the dates up top from 01/01/20 to 12/31/20. And then I'm going to run that report. So then we've run it, looks good. Now I'm going to copy the tab up top. Here's the tab. I'm going to right click on that tab. I'm going to duplicate the tab. We're going to duplicate it. Now we have this nice tab called the profit and loss report. I'm going to do the same for the balance sheet. I'm going to go back to the original report, the original tab, I should say, back to the reports down below on the left side. And then we're going to be creating the balance sheet. So we'll select the balance sheet report. We're going to change the dates up top. So scrolling back up top, dates 01/01/20 to 12/31/20. Forgot the 1/20. I didn't forget it. I just didn't push the button hard enough. Anyway, we're going to go to the run reports there. And then I'm going to basically make a new tab again. I'm going to right click on that tab, right click on it and duplicate it. And so we'll have another tab up top. So there's our balance sheet and our income statement. Now, last time we entered the received payment into undeposited funds, right? Went into undeposited funds. If I select the undeposited funds, then we have that undeposited amount for the 1,080. So then the next step is to take it out of that undeposited funds. I'm going to scroll back up. I'm going to go back to the data. So I'm going to go back to the data. We're going to take it out of that undeposited funds area and we're going to put it into the checking account. So that's going to be our step here. To do that, we can go into our trusty plus button up top where our forms are at. And you'll recall once again, it's not under the customer section, but you really kind of are thinking of the deposits as something that came from the customer cycle typically, unless something other than that happened, like a loan or you put the money in as the owner or something like that. So we're going to go to the bank deposit over here. Now, the bank deposit then is going to be tied to those received payments screen. So when you're looking at the top part of the bank deposit then, let's make this, before I forget, I'll change the date for a couple days later, like the 8th. Now, if you're jumping into this, if you close the software and you're going back into the software, you're not going to see these transactions even if you made them in the past, because remember, it'll basically disappear. But you can follow along anyways because it's going to be the same process and they have practice data underneath it. So you'll note then that what's going to happen then is these amounts up top, selected the payments included in the deposit, are coming from the receive payment item. So if you were to click on this item, you'd go to the receive payment. You can see the amount on the right of the 1,080. So what we would typically do then is say we've recorded the received payment, therefore, and now we're going to check off the deposit, that we're going to have the deposit. And if we had more than one, then I would check off however many deposits we're going to go to. So whatever we have on hand for in terms of actual checks, actual money and whatnot, the cash register, we're going to take that, we're going to add them up, and then we're going to make that deposit for them. So in this case, that would be the $2,755. Now, if you had some other kind of deposit that was happening, then you would go down here. Say you, the owner, put money in. Well, now you're going to make another type of deposit would go to some other account, like the investment or the capital account or something. We'll talk about that later. Or say you got a loan that deposited into the money, into the account. Then you could use this deposit screen for that purpose as well. So I'm going to scroll back up top, and when you think about the deposit screen, obviously this one's fairly straightforward. You would think that it would be going to your checking account. Now you could alter, if you have multiple checking accounts, you can alter the one that it's going to. But obviously the default, you would think, all right, it's going to be, if I say deposit screen, the deposit form, this is a form for QuickBooks, will be increasing the checking account for the deposit. And then the other side, typically, the other side is going to be reducing the undeposited funds if you're doing this along the normal kind of transaction with regards to QuickBooks. Everything's going to go into undeposited funds. Then we're going to take it out of undeposited funds, which you could think of as another kind of another kind of cash account in general, cash that you're holding on to. And then it's going to go into the actual cash account of the checking account. Let's record this and see if we can check that out. We should see a deposit for the $2,755, which is our 1,080 plus this other deposit we're grouping together. That's important, by the way, because we want to be able, this number that's going to show up in our accounts in the cash account will be grouped. We want that to match the way the deposit will show up on the bank statement, because we would like to be able to compare our numbers to the bank statement in what's called a bank reconciliation. And it's a lot easier to do that if we have the same grouping. And that's the function of the undeposited funds. That's one of the major reasons we have undeposited funds, so that we get that grouping correct. So I'm going to go ahead and say save and close. So I'm going to select the drop up and say save and close. There we have it. And now we're in the balance sheet. So I'm in the balance sheet tab. And I'm going to say, all right, there's the checking account. I would expect it then to go up. So I'm going to select that checking account and see if that is indeed the case. Here we have on January 8th, we have the increase of the $2,755. If I select that, that should take us to the deposit. So there's our deposit. Closing this back out. Note that although we have those two items in there, it's grouping them together as one deposit amount instead of two separate items in our GL account. And that again is how we want to tie that out to the bank statement. Scrolling back up, I'm going to go back to our data. We're going to go to the undeposited funds, also a balance sheet account. It's in essence another cash account, but it's down here in other current assets. I'm going to go into the undeposited funds. We'll select that item, and that should be decreasing the undeposited funds. Notice here, however, it broke out because the undeposited funds are showing the detail. So although these two got deposited together and are recorded in the bank in the checking account as one number grouped together, here they're showing them as the two numbers, giving that detail within the undeposited funds so that you can match the money out that went into undeposited funds with the sales, with the received payments, and then is going out, the received payment form, and now it's going out with the deposit. So it's not showing, in other words, the total $2,755, but rather the actual individual amounts, so that you can easily then match out the increases and decreases. I could say, okay, here, check that to that. If there's something in here that doesn't tie out, I could go in and I could tie everything out properly, which I couldn't do here as easily if it was grouping them together. So I'm going to go back to the left. I'm going to scroll back up top. We're going to go back to our report summary. Now, is there any effect on the profit and loss report from this transaction, from the deposit? You might think it's going to the checking account. We should have some kind of revenue again. And again, no, because just like when we got the received payment, we already record the income. We recorded the income at the first point in time when we did the work, and that's typically closely linked to the actual invoice. We usually invoice closer to when we do the work, and if we receive payment at some later time, then the payment, would be recorded at the later time. Now we're gonna go to the situation. If we go back to our flowchart in the desktop version, you might say, hey, what if I have that situation where I have a store or something and I get paid at the same point in time, or a restaurant, I get paid at the same point in time as I do the work? You don't need to do these two steps then to get to that point. You go directly to the sales receipt, which you can imagine having a check register. And in that case, you're kind of on a cash basis for this cycle no matter what, because even if you're using an accrual method, the two things are happening at the same time. There's no difference in timing between when you did the work and when you got paid. And therefore, you're basically on a cash method no matter what. You can use cash or accrual. You'd be recording revenue at the same point. That's what we'll do next time. We'll analyze the sales receipt. The sales receipt would be skipping these two steps and then going directly to the deposit. So you'd be taking the revenue and then going directly to the deposit rather than the two prior steps.